Good morning, good people. It's your man, Investing with Cam. I just want to come on here this morning and talk to you guys about a strategy that I'm going to use in order to start buying up AIPI and building up my shares in that particular ETF. Because, like I said, when the tech market, or I've said on other recordings, that when the tech market was doing good, stocks like Apple and Nvidia and Broadcom were shooting up like a rocket. AIPI was also going up in its share price, and it also was holding steady. It didn't decline or what have you, like yield max ETFs are doing, I should say, and have done in the past. But I'm on here and I want to show you, this is my little, this is Coney, and I have a small amount of shares. As you can see, I have 180 shares of Coney, in which I am down about $465 with the way that the market has been going. And my average cost is $9.33. And so if by chance Coinbase and the crypto market starts to go back up like it has done, and or if the yield max people implement a different strategy, knowing that Coinbase and the crypto market has basically, I would say, leveled off. It's not really going down a whole lot, and it's not going up either. And so they may need to implement a different strategy in order to get the cost of the Coney shares to go back up. But I'm not that far down considering. But like I said, what I'm doing with my 180 shares, let me scroll down here. As you can see, I just as of April the 4th was paid out a dividend of $78.86, or a distribution, in which that was based off of it was about $43 per share that Coney paid out. And here you can see I got paid $59.89, but I had about 100 shares at that time, and so I bought 80 more shares recently in order to be able to get this distribution that I have. But what I'm going to do is I'm going to take that money that I'm going to be getting from Coney every month or what have you, and I'm just going to invest it in the AIPI, because AIPI is not a stock that is just going to fall off of the map and basically go near zero because of the strategy that they use. AIPI actually owns the shares of each stock that it's trading. And so by owning the shares, it's a lot more stable, in opposed to doing a synthetic strategy that yield max uses in order to generate income for the people. But yeah, that's what my plan is. And excuse me, last time I was on here, I had one share, and I just took a couple of dollars and bought not even half of a share, but I got 1.3 shares now. But like I said, when the market opens on Monday, I'm going to go and buy a couple of more shares, and I'm just going to do that each month. And any little additional money that I do have, whether it's $10 here or $20 there, I'm going to invest it in the AIPI, so I can eventually build up my portfolio on AIPI. Because like I said, when the market does happen to turn around again and the tech starts to boom again, AIPI is going to be right behind it, and the distributions are going to go up along with the price share, or the price of each share of AIPI as well. But that's just my thoughts and the strategy that I plan on using. And don't hesitate to like and subscribe to my channel, Investing with Cam. Leave any comments. Let me know what strategies you guys may be using, or what stocks you may be buying, or ETFs you may be buying, because a lot of people are looking at this as a potential buying time on stocks as well. You have Apple that's down year to date, I think like $50-$60, but it's down quite a bit. You have Broadcom that's down. Nvidia is below $100 right now. So this could be a good buying time for people who just wants to buy into stocks that in the long term will more than likely also give you a positive return. But I'm focusing more on income, even though Nvidia pays out a small dividend, Broadcom as well as Apple, but it's nowhere near what the ETFs pay out. And some people may think it's a risk, but I don't really think so, because like I said, all of these ETFs and stocks have been going down recently. As a matter of fact, hey, I made a mistake and stopped recording, but I was saying let's go on JEPQ, which has been around quite a bit longer than what AIPI has, and it has about 30 more holdings as well, but it's pretty much based off of the same idea, or they're based off of the same ideas as far as trading the NASDAQ or trading tech stocks, I should say. But let's look at JEPQ, for example. JEPQ year to date is down $10, just as well as AIPI being down about that much. I think AIPI may be down a little bit more, but just to kind of show you, because people say, well, I don't think you should invest in AIPI, but in JEPQ is a better option, even though it pays a little bit less in dividends, and it only pays, I think, well, it pays out monthly if I'm not mistaken, but it's also down. As a matter of fact, let me see if I can go back to AIPI and see just how far down AIPI actually is, because I didn't look at that here as recently. So year to date, AIPI is down $13. So yeah, it's about a $3 difference, but they're roughly down about the same amount year to date. But yeah, just let me know your thoughts on ETFs, it's in particularly AIPI, because I feel like, and I've said time and time again, that in the future, AIPI is going to be a lot higher in price, and it's going to pay out quite a bit more in distributions, and so it could actually supplement your income in the future. If you start investing now, 10, 15, 20 years down the road, you could have enough shares that you could possibly retire and or, like I said, supplement your income with the distributions from AIPI. But again, it's your man, Investing with Cam. Like I say, don't hesitate to like and subscribe and leave a comment, and I'll talk to you soon.